What's up, everybody? Fairly Decent Investor here back once again. The stock that we are going to be talking about today is a hot stock today. They are up over 6% on the day. They are a digital sports and gaming company. You guys have most likely heard of them. The company is called DraftKings. They offer online fantasy sports contests and betting services for people over the age of 21. They operate in the US, Canada, and the UK. And they also now offer sports betting in states where it's legal. So with this, they also offer the digital sports book, casino games, and online horse racing. And they also have big partnerships with companies, with businesses such as the NFL, the MLB, and the NBA. So it's pretty self-explanatory, I would assume, for people to know how they generate revenue, but I'm just going to kind of touch on it anyways. So they do things such as like an entry fee for fantasy sports contests for people to join some of their contests for a chance to win things. And they also take a commission percentage off of winning bets. So let's say you win $100 on a bet, and I don't know what the actual percent is that they take. Let's say it's 2%. They'll make $2 off of your $100 that you're going to win. They also do charge fees for access to casinos and some of their horse racing games. And I'm not exactly sure how they generate revenue specifically through this, besides gaining more, people to come join their book. But they also generate revenue through their sponsorships, advertising partnerships with sports leagues and teams. So my guess is this is something like Monday Night Football, $50 free betting if you use whatever code MNF for to hop on a DraftKings to make an account. That would be kind of my guess of how they do it. They're headquartered in Boston, Massachusetts, and founded in 2012 by Jason Robbins, Matthew Kalish, and Paul Liberman. Jason Robbins is the CEO. He's got a Bachelor in Economics from Duke and an MBA from Harvard. He's worked as an analyst for a venture capital firm before starting up DraftKings, and he's been crucial to the expansion of DraftKings since their inception. The other two founders, Matthew Kalish and Paul Lieberman, also serve still with the company as the Chief Revenue Officer and the Chief Operations Officer. The latter being Paul Lieberman, who is actually now the President of Global Product and Technology for the business. The industry and sector that they are in is the digital sports and entertainment and gaming industry. Pretty self-explanatory. Their big competitors are specifically in the fantasy realm versus the betting realm. And fantasy, it's things like FanDuel, Yahoo Sports, ESPN, or Yahoo Fantasy Sports, ESPN Fantasy Football. In the sports betting realm, it's still more a lot of the brick and mortar stores, such as MGM Resorts, William Hill, Caesars Entertainment. I would also probably consider, I don't know, maybe companies kind of like Penn in there as well, people that do some of that online gambling. Um, my takeaway from all of this is that the company seems to be good in general. They're not really seeming to be doing anything revolutionary here. Kind of just good marketing. They've got a good team backing the company and running the company. They all seem well educated, seem to work together. The company's grown over years. On top of this, online gambling definitely is going to continue to take off over the years as more and more states legalize it as well. The industry is just going to continue to grow. The only downside that I really see with it is there are a lot of players in this industry and it's rapidly changing, and they kind of need to stay at the top to remain in the game. Right now, they are, I would consider them in the top, especially for online gambling. But, you could see how hard it is to just fall off from the top, and that would really crush them. So they just need to keep remaining on the top of this industry, and I think in the long run, they've got a decent shot. Moving on from the kind of just introduction overview of the company into some of the more specific stuff like the technical analysis, we pull up the 1 year chart of DraftKings, and we could see that they had a high of $27.98 over the last year and a low of $9.77 for the low of this year, representing a 65% decrease from the high to the low. As you can see here, we also have the Fibonacci lines in our 1 year chart, just giving you guys somewhat of a visual of where, some of the support and resistance may lie within the stock. So currently it's trading at $11.78. It's up 73 cents on the day, or 6.4% for the day as well. So definitely a big increase for the day, but still down significantly from its high. The RSI is actually looking pretty good here. It's 41. This is a good sign. It kind of bounced right off of that 30 level within this last week. So it's definitely showing us a buy sign right now with that RSI. The MACD is also showing us a buy sign right now. You could see as the lines start to kind of intersect and one goes above the other, that's typically a buy sign. It has not fully intersected yet, so it's not fully confirmed. We like to say that once it crosses, that's kind of your confirmation, but like I said, not fully there yet. With that being said, the last time that there was a similar setup to this of the RSI and the MACD looking similar to what they look like right now, the stock moved. Excuse me. Stock moved from $12.50 to $17.30. This was a 38% increase in the stock. So far, it's gone from, if we look at our setup we have now, it's gone from $10.50 to $11.78. So a 12.2% increase in the stock. And if we were to expect a 38% increase, once again, it would be at a price, a final price point of $14.50 on this stock from that $10.50. This $14.50 is right around our 200-day moving average and our Fibonacci line for one of our resistance levels. So the last two signs that this would definitely be a good time to buy for the short term would be that full cross in the MACD, like I said, and for the stock to close above the 9-day moving average. So it's kind of building up to look like it will hit that 1450 point right now, but you can't predict the future. You can just give it your best shot here. So based off of this, I would definitely be interested in buying the stock right now, preferably more of what I bought this morning. And that's just really just dependent on what type of investor you are. If you're short term, like I said, this would be a good time. Long term, we'll kind of talk about that actually a little bit after in our financial analysis. So as we take a deeper look now into some of this financial analysis, we're going to look at DraftKings more as a growth stock rather than a value stock because they do not generate profit. Personally, I prefer value stocks over growth stocks just because it's harder to predict growth than it is to see value in something, at least in my opinion and from my eyes. So with that being said, some of the things we're looking at here for this growth stock are we see sales have increased over the last year by 110%. Cash and short-term investments have increased 18.5%. Total assets increased 18%. Total debt increased by 1,500%. Again, that's 1,515% in the last year. Free cash flow decreased 111%. The price of sales was 8.5. With that price of sales, that's one of the biggest things we look at. We typically want a 3 or below. It really depends on the industry and the sector that the business is in. So we're going to say this is a little bit high for the price of sales, but the price of sales in the last quarter rather than last year was 3.7. So we see this move in the positive direction, closer to that 3 value. My takeaway from this is total debt increased an absurd amount. 1,500% in 1 year is an absolutely crazy amount of debt to take on in a year. So I'm not exactly sure where all this debt is going to be honest. I don't know what they're using the debt for. I would have to look deeper into this. But with that being said, if sales continue to soar and if the sales continue to soar, and the end of the day, it should be all right if a company like this takes on a lot of debt. But a company that does take on a lot of debt is always going to be something that's going to be risky. So I don't know. With all that being said, I don't see the financials really just like screaming buy here um, for a stock like this. I'm not really exactly sure what I'm supposed to be seeing that would suggest a buy on this stock. So I would just stay away from it personally as a long-term investor because I don't know exactly what's going on with this. But moving on from that into earnings, the newest earnings are going to be February 17th, and that's going to provide us the latest quarterly and annual reports will come out. Analysts predict EPS to be down heavily for the entire year at negative 3.14. However, they expect in 2023 and 2024 fiscal years for these improvements to be negative 2.39 and negative 1.25 in respective order. The sales are expected to increase by 68% for the 2022 fiscal year, which would be a 34% as well in the 2023 fiscal year. So a slight decrease over the last 3 years, almost a 30% drop each year. I wouldn't say that's not typical because, growth stocks typically have a lot of growth at first and then they start to level off a little bit. But within the last month, analysts have given 5 holds, 1 overweight, and 1 buy rating with an average price target of 17.2. If we look again at our 1 year with the Fibonacci's, we will see that the 17.2 is actually kind of close to one of our resistance levels. So they're kind of expecting it to go up here. I was expecting it to go down to the 14-ish level. But, with all that being said, if the stock were to blow by the 14, we could definitely see it hitting that 17 level as well. And with that being said, just to provide you guys with my overall takeaway of the stock, I do think this is an interesting short-term investment for a stock. The technical analysis is showing a lot of strong signs of an upward movement coming soon. I mean, that looks to be happening today for that matter. But I prefer to invest in value stocks rather than growth stocks. I think it's easier, like I said, to see the value than it is to see the growth. So I'm not 100% sold on this being a long-term investment. I think they're doing a great job in terms of marketing and getting the brand awareness out there. They've taken on huge amounts of debt, which I assume is in that measure to kind of increase that brand awareness. So if you're a long-term investor, we're thinking 3 to 5 years, I would be a little bit weary of this. There are a lot of other players and bigger players in the industry, and they don't seem to be changing the world in any sort of way or revolutionizing. So again, that's not something that's super strong in their favor. One positive thing, however, is I think the online sports betting is going to continue to grow and be here to stay in the long term. So if they can continue to capitalize on this, they'll likely be okay in the long run. But if you're more short term, I would definitely consider investing now. I would watch and see what happens over the next few days to see if that MACD crosses and we close above that 9-day moving average. So thank you guys for listening. This is it. So that's it for today's video. Thank you guys for listening. Remember to comment some stocks you guys want me to analyze below. Always better to get suggestions for them than come up with them myself. Remember to like, follow, whatever, subscribe, do everything you gotta do. Check out the other channels, Fairly Decent Investor on all of my platforms, whatever it is, Instagram, Twitter, here. Mostly just Instagram and here though. But remember, none of this is financial advice, just spreading my opinion and trying to make people aware.